Americans owe $1.57 trillion in student debt. That might be a hard number to wrap your head around. What it comes out to is $20,000 to $25,000 for the typical borrower. But of course, that's not evenly distributed.
I have $69,812.
I owe $47,000.
With $350,000.
More than 600,000 people carry higher burdens of $200,000 or more. Even people over age 60 had $85 billion in student debt in 2017, in part to help children or grandchildren get through school. Altogether, it's more than all the outstanding credit card debt in the country.
I think there's a critical mass of folks who hope someone will do something about it. And this is a case where, because the federal government holds about 90% of all outstanding student debt in the country, it's easier to make a case for them to do something about it. Whereas if everyone didn't want to pay their car loan or their mortgage, it's harder for the government to do something about that.
But there are questions about who would benefit.
Student loans are largely held by relatively affluent families.
So what would it take for the government to actually erase student debt? Democratic presidential candidates are talking about it. But is it a good idea? Let's start at the beginning. Student debt has been around for a while, but it's really boomed since the turn of the century. And the government holding that much debt is an even newer phenomenon. As part of Obamacare, the government stopped insuring private bank loans and took a bigger role in lending directly. The Obama administration hoped the move would save money for the government and help offset the costs of Obamacare. During the recession, as the Federal Reserve kept interest rates at record low levels, students could borrow at a pretty good rate. By 2013, cries for lower interest rates grew louder.
Right now, a big bank can get a loan through the Federal Reserve discount window at a rate of about 0.75%. But this summer, a student who's trying to get a loan to go to college will pay almost 7%. That isn't right.
Congress ended up passing rare bipartisan legislation to cut rates for student borrowers, but they were still significantly higher than what banks paid. Today, interest rates on various federal loans range between 5% and about 7.5%, higher than the average 30-year mortgage rate.
We've seen a dramatic increase in the amount that students are borrowing to go to college. Obviously, individual students are borrowing more because education is more expensive, but we're also seeing that more people are borrowing to go to college.
Another factor that kind of contributes to that is also budget reductions at the state level.
Think of education as an investment. The return on that comes from increases in employment opportunities and earnings generally more than outweigh the upfront cost. So where's the problem and where does the system kind of break down is that we have a tremendous problem with college completion in this country. A third of people, a very large number of people in our economy are paying for college, in many cases taking on debt to do that, but then not getting the earning bumps that comes along with having a degree, which means they're having a hard time paying back their debt. And so we're seeing that in the increases in student loan default rates.
Even though it's unclear how much it has hit the economy, experts believe the high level of student debt will increasingly be a drag on growth.
If all of a sudden I'm not having to make a regular student loan payment that was part of my budget, that's maybe a couple $100 more in my pocket on a monthly basis that now becomes fluid and flexible. Evidence suggests that a decent portion of that would be spent.
Even the Fed chair has weighed in.
As this goes on and as student loan continues to grow and becomes larger and larger, then it absolutely could hold back growth.
And for the most part, it's almost impossible to have student debt forgiven, even in bankruptcy.
I'd be at a loss to explain why that should be the case.
Since the government is charging interest on these loans, it stands to make a potential profit off of student borrowers. That profit number is disputed based on different accounting methods. But many believe the government should cut interest rates to subsidize loans instead of raising revenue.
We should not be profiteering off working families who are trying to send their kids to college.
So this all brings us to the question, could the government just simply forgive America's student loans? The simple answer is yes. The hard part? It would take a new law in a potentially divided Congress. 2020 Democratic candidate Elizabeth Warren is the first one to put out a detailed plan. The senator's proposal would eliminate up to $50,000 in debt for people with household incomes under $100,000. while giving smaller amounts of relief to people with higher incomes.
The cancellation of student loan debt of up to $50,000 for 42 million Americans.
Entrepreneur Andrew Yang and Senator Cory Booker have also said they would push for loan forgiveness plans.
Obviously, you've got a lot of voters out there with the debt, and they're saying, well, if I vote for this candidate, all of a sudden my student loans are going to go away. That's a pretty attractive political, piece to dangle out there. I think it leaves out a lot of unanswered questions. Even if I'm a borrower, am I personally paying for as a taxpayer, right? Because borrowers are taxpayers too, so it's not like this money is coming from nowhere.
It is on the mind of voters like Liz Smith, a 24-year-old who works in the advertising industry in Des Moines, Iowa. Smith, who took on more than $30,000 in debt to get through college, plans to participate in the Iowa Democratic caucuses.
I recently purchased a car, and I am nervous about having a car payment and a student loan payment at the same time, but it's unavoidable. You have to get to work, and you also have to pay back your loans.
Erasing student loans would likely be an economic stimulus.
Forgiveness of the outstanding student loan balances would without question be an economic stimulus.
One study estimates government forgiveness of all the loans it holds could boost real GDP by around $100 billion.
The question is, what is the most efficient way of providing stimulus to the economy? And my sense is that forgiveness of student loan debt is not the most efficient option.
But I think you're also going to see some concerns from the left that if you were wiping out all the debt, that would be a pretty regressive thing to do. And once you look at the numbers, this is, looks like the Trump tax cuts in terms of who it benefits. So it's a little hard to be out there saying, well, I'm against tax cuts for the wealthy, but I, at the same time, want to give this big handout to the wealthy.
That's where things get complicated.
The ones with the most debt are the ones who tend to have the highest earnings potential. So if what we want to do is stimulate the economy, we can think of better, more efficient ways to do that than a sweeping program that forgives existing student loan debt.
Under Warren's proposal, debt relief would end at $250,000 in income. Her plan would cost $1.25 trillion over 10 years.
I think there's a risk of spending over $1 trillion in a way that's not particularly targeted, beyond giving it to folks who happen to borrow to go to college, or in a lot of cases to go to graduate school, and then who, for whatever reason, haven't yet paid it off. I think it would raise concerns about who gets those benefits. It would raise concerns about fairness.
Of course, fairness is a central question in the loan forgiveness debate.
The student loan forgiveness. What about people who took loans and paid them back? What are we going to do? Give them reparations?
This is a giveaway to millennials who have had their parents and family and society pay for their bad decisions for their entire life.
There already are ways for people to get loan relief in the U.S. Many borrowers have income-based repayment plans, which can cap monthly loan payments at about 10% of income. But
what we're seeing is that students who really need the benefit of these income-adjusted repayment plans aren't aware that they exist, or if they are aware they exist, are having a hard time enrolling in them.
in other countries, college is cheaper to begin with. But on top of that, they found creative ways to help the people that really need relief. Like in Australia.
It's done through the tax system. So when your taxes get withheld from your paycheck every week, they also take out your student loan payment. And what that means is when you lose your job, the government doesn't come after you to pay your taxes. You don't pay your taxes because you're not making money anymore because you lost your job. So this works the same way with your student loans in countries like Australia.
In the UK, students don't have to start making payments on their debt until they make a certain amount of money. In Sweden, borrowers have a longer period to pay back loans than they do in the US. On the other side, the Trump administration has been more focused on reducing the costs of college and holding schools more responsible for educational outcomes.
Student loan debt. I'm going to work to fix it.
There is some evidence that the cost of higher education has started to plateau. But that won't help the people already saddled with thousands of dollars in debt. That's who politicians are talking to.
I do think it should be focused on people that need it the most. So whether that be their potential future income or what their families weren't able to contribute, that having this huge amount of student debt would really impact them and their future success.